Hi, this chapter is about cost volume profit analysis. Generally speaking, how easy you'll find this chapter depends on how um, much you've paid attention in algebra or found algebra easy, etc. So, but what I really want to kind of do with this handout is try to prove to you it's not as hard as it seems. And if you can get an example, and possibly even this example, that you know the answers to, and then write out this example and then ask yourself, how is this problem that I'm looking at different from this example? It'll help you a lot. So that's my goal here today. You can tell me if I succeed or fail. So anyway, we are selling t-shirts for $15 each. They cost us 10, and I pay table rent of 100. So I'm going to sell t-shirts for the day or the month or whatever, and so they charge me $100 table rent, and I have to buy t-shirts at $10 each, and I'm selling for $15 each. Okay, so my first question is, what is your profit if you sell 50 t-shirts? So I'm hoping you don't look at this. I hope you pause the video and you write it out, because this is how you learn, kind of seeing where your mistakes are made. But after you, please stop the video and try it. Let's compare it to what you did. Okay, so welcome back. So anyway, so hopefully you did something like 15, and again, many of you would have taken shortcuts, and we're going to talk about those shortcuts later, but I do have a method to this madness of wanting to go through it in a little bit more detail than you probably did. So I sell 50 t-shirts for $15 each, so that's my revenue. They cost me $10 each, and I had $100 rent, so that equals my profit. So basically, many of you could have done 15 times 50 and minus 10 times 50, which is $500. But I want to do it this way. Okay, so 15 minus 10 is 5 times 50 minus $100 equals profit. So 250 minus 100 equals 150. Okay. So what I also want you to do is, and I want you to turn this into me, so this is going to be the thing that tells me whether you actually listen to this video. I want a separate paper attached to this one with important equations written on it, and the first one I want you is to write is this. Okay, but this is so obvious, this is what you would have done, but trust me in that sometimes in a problem, you just need to go look at some equations and say which one fits this purpose. Okay, so now I'm going to actually not scroll them up a little bit. So what is your break even in units? Okay, so again, I'd like you to stop this video in just a second and see if you can solve it. So wait till I say pause here. So what I want to know is, break even means I make zero profit. So here I made $150 profit. So my question is, how many units do you need to sell? So it's obviously not 50, it's less than 50, because I made a profit of 150 on these. So how many units do I need to break even, to not lose money? So this is where you pause, try it, and then I'm going to walk through it. Okay, welcome back once again. You might get tired of that. Okay, so basically what I'm going to do is, we're going to do this two ways. I'm going to show you the long way, and I'm going to show you the short way. Okay, so I'm plugging it into this equation right there. 15 times the number of units minus 10 times the number of units minus 100 equals 0. But let's talk about these VCFC for just a second. A variable cost is a cost that varies with the number of units I sell. So for instance, the $10, the total variable cost is going to be $10 times the number of units. So it varies based on the number of units I sell. A fixed cost doesn't change. So the rent is a fixed cost. No matter how many t-shirts I sell, it's going to be $100. Okay, so I'm putting it in right there into that equation, the same one that hopefully you did some form of. Many of you probably started right here and just said, okay, I make $5 on each of them. And so 5 times 50 minus 100. That's why I wrote it that way. Okay, so now I'm going to solve for x. So I have 5x equals 100, and I have then 100 divided by 5. And I didn't write down my answer, but the answer to that one is 100 divided by 5, or 20. Okay. All right, so this leads us to a shortcut formula. Notice you can put it in this one, although sometimes the problem doesn't give you all this information. So it's good to know with that shortcut formula. That shortcut formula is right here. This is fixed costs, and this is fixed costs divided by contribution margin per unit. So you might want to add to your piece of paper another formula, which I didn't write on here, but that other formula is contribution margin equals selling price minus variable cost. Okay, and you can actually do contribution margin in total or contribution margin per unit. So this one, 5 is my contribution margin per unit. If I did it up here, 15 times 50 minus 10 times 50 equals 5 times 50. So here, 250 would have been my contribution margin in total. So that's an important equation, but I didn't clear that. I should have written it down. Okay, so you've got these two equations written there, and hopefully you're rolling your eyes because this is a little too easy, but this chapter gives more people problems than any chapter, and they're these exact equations. All right, so next thing I want to know is what is my break-even in revenues. So my break-even in revenues, I could quickly say, okay, remember I forgot to write the final answer there, 20, 100 divided by 5. Okay, so my break-even in units, or revenues, I could just simply take 20 times 15. So 20 times 15 is $300. So this is going to be my check figure, and there's honestly nothing wrong with getting it by taking the 20 break-even units times the $15 selling price. Okay, but there is another way that you do have to know because you're not always given all this information, okay? And that other way is to figure out what percentage of the selling price is the contribution margin or variable cost. So the first thing that I do, I'm going to go over here. I take my selling price of 15 minus my variable cost of 10 equals contribution margin of 5. Selling price is always 100%. So variable cost percentage is 10 divided by 15, and contribution margin is 5 divided by 15. Let's talk about percentages for a little bit. One way to visualize a percentage, especially if you're kind of having trouble with it, let's pretend that a soda or a Gatorade or a bottle of water or whatever you're going to drink is $1. Okay? If I shove $1 into a soda machine and I get out a water or Gatorade, this right here is the cost, the variable cost, the cost of the bottle, the cost of the soda, etc. So the soda costs 67 cents. So 33 cents of that soda contributes towards covering fixed costs and profit. And so this, with the percentages, I can change this to what if this were $1 instead of $15. So again, $5 of every sale contributes towards covering fixed costs. 33 cents of every dollar goes towards covering fixed costs. So, pause this. Okay. So now I can prove it this way. Now a lot of people have trouble with this. I'm not really sure why, but I could restate this thing right up here. Okay, so selling price times X is technically revenue. Okay, and variable cost times X is basically, if I want to restate it in terms of revenue, so revenue minus variable cost minus fixed cost equals operating income. I'm going to clear that. Can't scroll down and write at the same time in this program. Okay, so my revenue minus my 67% of my revenue minus my fixed cost equals 0 because variable costs are 67% of sales. So notice the shortcut right here, 33% of revenue equals $100 because R minus 0.67 R. So remember, revenue minus variable cost is contribution margin. So right there, that's no coincidence that that's contribution margin. So my 0.33 R equals $100. 100 fixed cost divided by contribution margin percent will give me my break-even in revenues. I don't really know why I stopped on all these and never actually wrote the answer. So 100 divided by 0.33 is $303. So notice it's 0.33333333, but we'll say approximately, that means approximately $300. Okay? Either one is acceptable. Remember, this is really for cost estimation, not for cost perfection. So that equals $300. Here's my check figure. I know they're the same. And so on your sheet, this is an important equation. Break even in revenues is fixed cost divided by contribution margin percent. Okay, on we go. Next one. What if I want to make 200 instead of break even? Well, I want you to kind of, again, pause the video and see if you can do it. This is where you learn, guys. Welcome back. Hopefully you got the answer, but hopefully you set it up something like this. Selling price 15x minus 10x. Remember, the selling price is 15, variable cost is 10, fixed cost is 100, but instead of 0, I want 200. Okay? So now I simplify that, and goodness gracious, I actually wrote an answer on here. X equals $60. Okay? So I want you to look at this one, though. Right there. Now we can get another formula that's a shortcut to this formula, and that is units for target profit is fixed cost plus target profit divided by contribution margin per unit. Okay, I could also do revenue for target profit, and it would simply be dividing it by contribution margin percent. Okay, so fixed cost plus target profit divided by contribution margin per unit to get units sold 60. Fixed cost plus target profit divided by contribution margin percent will give you revenue. So you can test it out. You can do 60 times 15 and write the answer over there. And then you can do 300 divided by 0.33 and see how close you get to whatever 15 times x was. Okay? I also want to show you this right here. You can honestly use the same equation for break even, but just use this one, because at break even your target profit is indeed 0. So you have fixed cost plus 0 divided by contribution margin. So it's really the same thing. So if you would rather just do one, that's fine. Just make sure you know how to use them. A lot of times the people that are overconfident are the ones that miss too much, so make sure you practice these. Okay. So now we're going into what happens if I have a business that sells pants and shirts and shoes, etc. So I can't say, oh, I need 20 units here because I am selling socks have a different contribution margin than shirts, etc., etc. Well, if you do that, what you do is you just get the overall information for the company. So if I have more than one unit, the only formula that I can use is this one, contribution margin percent. I can't get units because if socks have a contribution margin of 2 and pants have a contribution margin of 5 and another one has a contribution margin of 10 cents, obviously I can't solve for the number of units. Okay, so the first thing that I do is I determine contribution margin. So I have sales of 45 minus variable costs of 33, give me contribution margin of 12. Right now I figure out the percent. So always put 100% by the sales. Variable cost is 33 divided by 45. So what I'm saying here is 73 cents of every dollar goes towards covering variable costs. So you should probably put percents by those. And 12,000 divided by 45 is 27%. Now I do the contribution margin of fixed cost divided by contribution margin percent. I get 370,370. Okay. The very last one in this handout is probably the hardest. So we want, what if the store sells two products, A and B? They sell 70% of A and 30% of B. Okay, so what is my break even? So when I do that, I have to know and take into consideration the sales mix of 70-30 here. So here's the steps. And notice I've done it two ways, and I'm going to pull up a Excel spreadsheet in just a second to prove that these are correct. Also, don't get hung up when I show you the spreadsheets. These are actually two different scenario situations, because you can have various selling prices minus various variable costs that will have a contribution margin of 5 and 33%, and same thing over here. So there can be more than one answer to this, although probably using the first one based on units is more accurate for this problem, because I want the selling price to be 15 and 10. Okay, so here's your steps. figure contribution margin or contribution margin percent. I'm going to just do these both at the same time. Again, you're only going to do one or the other based on the information given. Okay? Multiply it by the sales mix. So the first thing I do is figure out contribution margin or contribution margin percent, just like I did before. So 15 minus 5 is 10. 15 minus 10 is 5. 20 minus 12 is 8. My contribution margin percent, again, sales is 100%. So 5 divided by 15 is 33%, and 8 divided by 20 is 40%. Okay? So now I've got those two steps. So here's my contribution margin, here's my contribution margin percent. Stop here. These are for two different types of problems, so I'm just doing it both ways to show you what it asks for. So the steps are pretty similar. Then I multiply by the sales mix. So my sales mix is 70% of A and 30% of B. So what this basically means is I sell 7 of A for every 3 of B. Some people prefer to do 7 and 3, 7 and 3. Be careful if you do that, because when you get back down to the bottom, you have to divide by 10 or 100, and so I can bring them back down to the individual items. Okay, but anyway, it still works if you want to do 7 and 3. Just think about it a little bit. Okay, so then I have multiply by sales mix. So 5 times 70% is 3.5. 8 times 30% is 2.4. Same thing over here. I get 0.23 and 0.12. Next step is add them together. So I'm going to add together these two, and I get 5.9 or 0.35. So what this is this is the contribution margin of my bundle. My bundle includes 70% of this one and 30% of this one. So my bundle's contribution margin, which is made up of 70% of that and 30% of that, is 5.9. And my bundle's contribution margin percent is 0.35, which is made of 70% of that and 30% of that. Then I just go back to what I've done before, fixed cost divided by contribution margin. So fixed cost of 100,000 divided by contribution margin of 5.9 or 3.5, I get 16,949. Make sure you write units next to this, because this is break even in units. Fixed cost divided by contribution margin per unit. This is fixed cost divided by contribution margin percent. So this right over here, this one is revenues. Oops. Okay, so revenues right here. Okay, so this one is units. You can write that out better than I can do that. Okay, so the last thing we need to do then is this is the bundles. So if this is my bundles revenue, or this is my bundles unit, 70% of my bundle is made up of A, so 70% of the 16,949 units is A, which is 11,864, if I've done my math right. And 30% is for B, so 5,085. So this one is A, and this one is B, okay? And again, of my revenues, A is this one, and B is this one. Okay, so now I'm going to go to my spreadsheet, so I'm going to clear this and pause it for just a second. Okay, so now I kind of want to prove that I'm right, and I want to also show you that these answers are actually a little bit different number of units, because sometimes different selling price, different variable costs can have the same contribution margin percent. All right, so in the first one, here's my income statement. Selling price minus variable cost is contribution margin, minus fixed cost is operating income. All right, so I'm doing that. Pause. Okay, I wanted to make it a little bigger. Okay, I didn't label this very good, but this 11,864 is the number of, so we're going to deal with the number of units first. Okay, so remember product A had a $15 selling price and a $10 variable cost. Product B, I sold 5,085 units from your prior page, which is 20 and 12. So I just simply, I'll click on this, I don't know if you can see the formula right up there. So if you click on this formula bar, it shows you what you added. So this one is simply the number of units times the selling price. This one is simply the number of units times the variable cost. So my contribution margin on A is, I could do also 5. So watch if I took over here, 11,864 times 5. Okay, I get 59,320. So honestly, I could have just started that line. Then I sold 585 of B, so 585 times 20 is that, 585 times 12 is that, which leaves 8 here, so 585 times 8 is that, or I could just subtract them. So if I add up this right there. Plus that, my contribution margin on what I sold on A and B, I get $100,000. I subtract my fixed costs, and I indeed come down to 0. Note, you do not have to do this step. I'm just proving that the numbers work. Okay? On the other one, the sales mix, so if you look at your problem, you would have gotten $200,000 and 85,714. Okay? But what I've done in Excel is not rounded them. I've let it go to 0.33333. Okay, so basically what I've done here is I have solved for using the sales mix, etc., fixed cost divided by contribution margin, and when I add them together, instead of getting 0.35, it's actually 0.3533333. Okay. Otherwise, I wouldn't come quite down to 0, and I'll see if I can change it here in just a second. But my instead of 285,714, I get 283,018. I do 70% for A and 30% for B, and I bring those up here in the revenue line. So this is that. On your paper, and I'll change these in just a second, you would put 200,000 and 85,714. Okay, so I know that, go back to your percentages, 67% of that number is variable cost, so basically I took 67% of that number to get this one, and then 33% of that number is contribution margin, or I could just subtract it. For the other products, it's 60/40, so I take my 84,905 as my revenues. Again, you would have done 85,714, which I'll do in just a second. And 60% is variable cost, 40% is fixed cost. Add that plus that, so I have two products, so I add them together. So there's my total contribution margin. I subtract my fixed costs, and I get 0, break even. So notice that both of these solve the problem. But one thing I do want to show, if you're trying to prove, is this always going to come the same? And the answer is no. Sometimes the answer, you can have more than one answer because you can get a 33% contribution margin on a different selling price variable cost mix. And I'll prove that by saying, remember over here I said I'd sell, oh, hold on, I can do this right on this. Notice, let's see if I can find a, nope, do that. Okay. Notice this number, and that number, and that number, and that number are different. Okay, so also these two numbers, if these were exactly the same problem, these all would be the same. So obviously, when I can have a different break even in revenues because different combinations of selling price and variable cost can add up to a 33% and a 40%, or an average of 35.33 contribution margin. But notice here's my kicker. Okay, so either way is fine. I can follow through your work, but a lot of the problems will say break even in units, which you need to do it this way. Okay. Quite frankly, if the problem asks for break even in revenues and you do it this way, you could just add those two revenues together, and 279,660 is also a break even in revenues. But let me just get back to your problem. I think I can change this to 0.35. Okay, so notice if I just had it set up there. Now I've got the 285,714, and I have the 200,085,714, and I have it all set up. So notice that the reason I changed it to the exact percent is just our rounding is giving us a $952 difference just due to rounding. So that ends this. So hopefully you learned something, and we can move on.